we should be soon ready to go. So let's go with the things this week. First, look at the charts on the email today. In January, we had a market that went up. We discussed that, but most of the money in equity mutual flows was negative. Clients took off $15 billion out of equity. That's very interesting because usually there's high correlation. Now they're uncorrelated. So that make us believe that it's bullish for the market. That money will come back when they see the returns. Remember, usually people follow the market, not the other way around. And I think that's a positive story. In Venezuela, the upgrade, as you know, the deadline for most of the European countries to call on President Maduro to call into elections came and passed with nothing changed. So in the last 24 hours, the UK, Germany, France, Spain, Denmark, Austria, many countries in Europe have recognized Guaido as the acting president of the country. And over the weekend, President Trump, talking to the press, said that all the options are on the table, inclusive the use of force. No surprises there. We think that this still will drag. It's not going to be, right now because we still need to wait for the military action, the sanctions to take bite. They still have the money. They will 80% of the oil still goes to the United States. So the issue is like, what are they going to do now? They might have to use an intermediary, the Russians buying the oil, reselling to the Americans. The Americans are going to say, no, that's not allowed. So there is many things that you can do in between. But clearly, these sanctions are going to bite very, very hard on the Maduro administration. So we'll follow closely, see what's the story. Many banks starting to adjust on the thing that the Fed is more dovish. After what we had last week in terms of the communique, I think that they're going to be more flexible. Look at employment, look at inflation. Most banks are saying, listen, the Fed